Mountain Corp's income statement for the year ended December 31st, 2020 had the following condensed information. We see some items from the income statement. There were no purchases or sales of trading, fair value, net income investments during 2020. Mountain's statement of financial position included the following comparative data at December 31st, and we're given some accounts on the statement of financial position. And we're asked to prepare the operating activities section of the statement of cash flows using the direct method. Okay, let's do this. So let's put this right here. So we're gonna have, let's set up our statement just because it's good practice. So we're gonna have Mountain Corp, statement of cash flows, and it's gonna be the year ending December 31st, 2020. And we're going to have cash flows from operating activities. And we're using the direct method here. So we need to figure out a few things. We're going to need to know cash paid, cash received from customers. We're going to need to know cash paid to suppliers. And we're going to need to know cash paid for taxes. Those are our three common headings, and we can have other ones under the indirect method or under the direct method as well, sorry. But these are the most common ones. So we definitely know we need cash received from customers. And the way that we normally compute this is we take sales revenue and then we subtract the increase in AR. And if there's a decrease in AR, of course, we would add it back. Because the reason why is that the more AR we have, the less cash we've received because we've agreed to give more customers credit. So let's start filling in those lines. So sales revenue here, I can see is $78,000 on the income statement. So 778,000, sorry. So 778,000. Okay. And then what happened with AR? We can see it right here. So AR in 2019 was 54,000. And now it's only 35,000. So it actually went down. So we're going to add, I'm going to change this. We're going to add a decrease in AR. So that's good for us. So our cash received from customers is going to be the sum of these two right here. So our cash received from customers is going to be 797,000. I'm going to put this right here. Cash received from customers. And I'm going to put 797,000 right there. We got our first one. So now cash paid to suppliers. So let's so we're going to start here with operating expenses. And then we are going to look for the change in accounts payable. So we're going to deduct an increase in accounts payable. And let's see if it's actually increased. Why would we deduct an increase in accounts payable? Well, an increase in accounts payable means that we've paid less. So we're going to reduce the cash outflow that we've made to suppliers because we have taken on more credit with other people. So we've paid out less cash. So let's see what that looks like. So first, let's find the operating expenses item on the income statement. So operating expenses excluding depreciation is 499,000. So let's put that amount right here. 499,000. Just insert a row here. Okay, so then we've got, so sorry, this is the 499. I put it in the wrong cell. So 499 here. And then what's happening with AP? Let's take a look. So AP right here, it was 31,000 and now it's 44,000. So 31 to 44, 31,000 minus 44,000. So it increased by 13,000, and as we expected, we're going to deduct it because it's actually good for our cash flow. It's going to reduce our cash outflows to suppliers because we've extended our credit. So then our cash paid to suppliers is going to be the sum of these two items. So cash paid to suppliers is going to be 486,000. So we're going to have cash paid. We're going to have to suppliers. We'll put this right here. 486,000. It's going to be a negative 486,000. And now let's figure out tax. So taxes paid. So we're going to have income taxes from our income statement. So let's find that number on the income statement. Income tax expense, 58,000. And that would be the combination of current and deferred tax. So we look at it in together for the cash flow statement. And then we are going to look for what's happening with our income taxes payable account. So just like with AP above, we're going to add a decrease in AP because we're reducing our cash outflow here. So this is an expense, and we're going to add a decrease in income taxes. So the more income taxes payable that we have, the higher the payable, the less income taxes we actually paid. So here are operating expenses. So the more of a payable, the less the operating expenses we have. Here, the more the payable, the less the tax we paid. Okay, so here we had 8,500 to 6,500. 8,500 to 6,500. So it did decrease, and we're going to add that to our taxes paid. So our cash paid for income taxes is going to be the sum of these two. It's going to be 60,000. Did I miss a 500 somewhere? Income taxes, 58,000. 85 minus 60. 85 minus 6,000. Okay, so 60,500. So we're going to have income taxes. We're going to have this number. And that is all of our operating cash flow. So we're going to have net cash provided by operating activities. And the reason why I've said created by instead of used by is because if I take net income and I add these two because they're negative, so I can add them, then that will give me net cash from operating activities of 250,500. And you can see how we computed the cash received from customers, sales revenue, and we subtracted an increase in AR because that means, a decrease in AR because then we've received that much less cash. We've got cash paid to suppliers, where we've taken operating expenses and adjusted for the increase or decrease in AP, and taxes payable, we've taken income taxes and adjusted for the increase or decrease in income taxes payable. This should actually say income taxes payable. And there you go. That gives us the operating cash flow section of the Mountain Corp statement of cash flows for the year ending December 31st, 2020.